would like to call on stage Mr. Mihir Shirgaonkar from PhillipCapital. Let's call on stage Mr. Mihir Shirgaonkar.
Very good evening to all of you. We begin every discussion with the fact that India is indeed the next big story. And with this backdrop, I am here presenting a case for making global investments. It may look ironic, but let's begin. So the very first question, I'll directly address the elephant in the room. Why should we consider global allocations in the first place? In the past so many years, there has been a lot of awareness about global markets. There have been a lot of avenues for global markets opening up. There is a lot of curiosity, but at the same time, especially HNIs and ultra HNI investors and even retail investors, so to speak, they are updating themselves with what is happening around us. Today, every discussion is around inflation in the United States, the US Federal Reserve, Russia, Ukraine, China, Taiwan, so on and so forth. So with this backdrop in mind, why consider a case for global allocations where we know for a fact that India is indeed one of the best performing markets in the decades to come? So this is a 15-year history of some of the largest equity benchmarks in the world. We started, so typically we've taken a comparative analysis starting with 2008, if everyone started with 100 in their respective currencies, then over a 15-year period, this is something that would have happened. Now, why did I take March 2008? All of us know it was the 2008 crisis. Volatility was at its peak, and wealth advisors such as all of you would have advised that now is the best opportunity to allocate for the long term. So this is what has happened over a 15-year period. As we can see, Nifty indeed is one of the best performing benchmarks, but it is not the best performing benchmark as we can see, and this is where numbers are speaking for themselves. The best performing index, in fact, has been NASDAQ, and this is considering the fact that NASDAQ has corrected by 33% in the year 2022 in the entire technology meltdown. Even then, on a CAGR basis, or let's say on a cumulative basis, what is happening is NASDAQ has really outperformed Nifty 50. Of course, a comparison between Nifty 50 and NASDAQ may not be an appropriate one because one is a very, very technology-heavy benchmark versus Nifty 50, which is very, very diversified. A better comparison could be Nifty 50 and the S&P 500. So this is a similar, in fact, the same set of numbers. Nifty 50 versus S&P 500. Of course, in the last 15 years, Nifty 50 has done better than the S&P 500. The question is, what am I doing here then, if Nifty 50 indeed is the best performing benchmark? The question which we really need to ask is that yes, we can see that a benchmark to benchmark comparison surely shows that Nifty 50 is outperforming. But if you as an investor would have invested in a portfolio of S&P 500, what would have really happened? So two things would have happened. First is that you would have converted your entire Indian rupees into a dollar portfolio and then invested those dollars into S&P 500 because you are investing globally. So the total returns that you would have made over a 15-year period would be a function of two things. The underlying returns of the S&P 500 and of course the fact that the dollar itself has more than doubled in relation to the Indian rupee. After 15 years, when you are reconverting your portfolio back into Indian rupees and doing a rupee to rupee comparison with Nifty 50, this is what is happening. The true comparison, rupee to rupee, is the white line versus the green line. Okay, as we can see, that the impact of currency depreciation or Indian rupee depreciation itself has magnified the returns of the S&P 500 for an Indian investor. So that is the first value proposition, what one can consider when investing globally. The impact of rupee depreciation vis-a-vis the US dollar. Of course, just like any other asset class, even the dollar is having its own cycles of ups and downs. But over a longer period of time, this is something that has unfolded, and this is something that we can reasonably expect, at least maybe a 1 to 2% depreciation going forward. Last year, the dollar gained almost 10%, and we cannot expect 10% every year. So of course, the same table, if you look at a calendar year returns, we can see that there are some years in which Nifty has been the best performing index, and then there are certain years in which the Nifty has not been the best performing index. A major chunk of the returns in the previous decade actually have come from the S&P 500 and NASDAQ. Okay, if you see, especially since 2016, NASDAQ, except for 2022, has been consistently outperforming other benchmarks. And I will come to that very, very shortly. So that is the next question, that why should we consider global allocations? Because here I've really spoken about what is it that has really unfolded. But question is, we are in 2023, and if all of us were to have this discussion again in 2033, what would have really happened? What we are seeing is that today across the globe, there are disruptions across businesses and across regions. A lot of disruptions are happening. Typically, we are talking about Industry 4.0. Today, even Indian retail investors want to know about what is happening in the semiconductor space, what is happening in the artificial intelligence space, robotics, electric vehicles, genomic revolution, so on and so forth. There is ESG investments, there are climate change investments, a lot of things happening. And these are exactly the kind of opportunities. I mean, Harbir sir did mention that roughly 45% are looking at capitalizing emerging opportunities. We are talking about ideas which we believe will drive the next leg of global growth. I mean, because of the COVID-19 pandemic, some of these digital disruptions across businesses and technology disruptions did take a back seat. But we really see a lot of them coming back to normal. In fact, during the pandemic, a lot of bigger organizations actually took the opportunity to advance their digital disruptions. And the result is more profitability, stronger balance sheets. And that is what we have over here. Last is, of course, mitigating single country exposure risk. So again, this is where I borrow some points from Mr. Harbir. Just like the question that we ask is PMS plus PMS plus mutual fund or PMS or mutual fund. Similarly, in this case, it is not about whether we invest in India or we invest globally. It is plus. It is India and global. That is the combined portfolio that we should really be targeting. Because all said and done, despite the best of the India story, there is always a single country exposure risk which investors are exposed to. And it will always be a good idea to diversify away some of this exposure, not only in terms of different geographies, but even currencies. So this is just the summary of what we mentioned, what we are really doing by offering our products, which I will now come to shortly, is we are enabling our investors to mitigate single country exposure risk. We are helping investors evolve in a very, very dynamic investment landscape. Of course, we are building them $1 portfolios. A lot of HNI investors typically come with the objective of sending their kids abroad, maybe after 10, 15 years, and they really want dollar assets to be created. So there is one way in which one can consider global investment so that the impact of rupee depreciation can really be factored in. And of course, the biggest value proposition is that we are enabling our investors to capture the trends of today and the ideas of tomorrow. So with this, I take the opportunity to introduce our firm, Phillip Ventures IFSC Private Limited. Phillip Ventures IFSC is a part of the PhillipCapital India group. We have more than 4 decades of financial expertise. We set up as a firm in 1975, headquartered in Singapore. Today, we have a presence in more than 15 different countries. We operate in the major financial hubs across these countries. Across the globe, we are servicing more than 1.3 million clients with more than 40,000 plus products and $35 billion of assets under management. Even in India, we have a very strong institutional business, more than 20 years into the institutional business. Now coming to Phillip Ventures. So Phillip Ventures IFSC is a new offering. It is the Gift City business. So what we have done is that we have domiciled also in Gift City. We are a part of the India business. We have set up shop in Gift City. In fact, we are one of the first firms to set up a presence in Gift City with the sole purpose of evolving a range of offshore products, typically focused on investing in the global markets. Because today, Gift City has a separate regulator, it has a separate jurisdiction which specifically permits investments into the global securities. So today, investors need not go to regions like a Mauritius or a Cayman Islands or a Luxembourg. They can directly come to Gift City and meet their global investing needs. Today, we are running the global PMS. We've also started offering global advisory, and we are servicing clients across countries. And this is a very unique thing that today, HNIs and ultra HNIs, even outside of India, are coming to Gift City, coming to PhillipCapital, in turn to invest in the global markets. I mean, all these HNIs, typically in the Middle East or maybe Africa, they have their own avenues to invest in the global markets, right? Even then, they come to Gift City and they are really showing that kind of confidence, not only in PhillipCapital as a brand, but even Gift City as a jurisdiction. And this is something which wealth advisors should take a note of. So the pillars of our process, Phillip Ventures, IFSC. So typically we are staying very true to the philosophy of PhillipCapital, which is a very strong focus on fundamentals. In fact, those of you who know PhillipCapital also know our institutional research team. Some of the best research in the industry comes from our firm. What we are doing in our Gift City entity is that we are combining this fundamental approach with data-driven capabilities. This combination, we believe, enables us to analyze sectors, regions, and themes in much more detail. Because there is so much happening around us, there is so much noise around us, that a combination, which is a fundamental analysis with data-driven capabilities, really helps us eliminate this noise and capture trends across regions. And similar to our philosophy, which we are following in our India business, especially on the PMS and the advisory side, we are offering products with a very, very long-term focus in picture. What we are really doing is we are enabling our investors to invest in those areas which will generate decent returns or even higher returns over a longer period of time. We are really looking at investing in some of these high conviction ideas which may or may not be investable in India today, but the listed space in the US markets allows investors to capture these opportunities. And I will come to this shortly. And last is, of course, seamless implementation. Now, it is our endeavor as a firm to play a very active role in the evolution of Gift City as an ecosystem. And what we are really doing is that it is our endeavor also to make the entire process very, very seamless for our wealth partners as well as our clients, be it in terms of the onboarding, be it in terms of the fund transfers, be it in terms of the documentation around LRS, so on and so forth. So we are really enabling them to make it very, very seamless. Now the process, what we are doing at our end, because we are monitoring global markets after all. So today we are analyzing more than 60 different unique business ideas. Again, this is with a combination of a data-driven approach and the fundamental analysis. Now what do we mean by these 60 different ideas, and why is it that I am making a special mention here? Now, today, when we look at the global markets, what we've really realized is that even within a sector, like particularly, let's say, a sector like healthcare in the US. Now, within healthcare, there are different businesses like a genomic revolution, there is medical devices, there is digital wellness, there is pharmaceuticals, there is biotechnology. Now, within healthcare, there are 5 different businesses having 5 different dynamics of their own, and they are completely functioning different from one another. So it is very difficult to completely categorize them as single healthcare. We are really analyzing these different business ideas in greater detail. Similarly, technology. We are enabling investments into areas like semiconductors, robotics, artificial intelligence, electric vehicles. All of you tracking the global markets do know that semiconductors, okay, some of the largest semiconductor firms have given 150% return on a YTD basis. And our products have enabled investors to capture that upside as well. Similarly, regions. Now, investing in the US markets alone gives us access to certain products, which in turn allow us to invest in more than 50 to 60 different regions across the globe. I mean, who said global investing was all about investing only in a US or a China? There is this entire European belt, the entire South American belt. There are countries in Southeast Asia. They have different dynamics of their own, different macroeconomic indicators, different geopolitical considerations as well. And then there are opportunities for making returns amid the entire chaos that ensues at times. I mean, very simple example, Taiwan. With so much geopolitical tension also, anyone actually monitoring the Taiwan space would know that Taiwan has been one of the best performing country-focused exposures in recent times. So that is exactly where our analysis and our approach helps us eliminate the noise from the insights. And that is exactly how we go about investing. So now coming to the products. So we started our global desk with the global PMS. So our flagship portfolio is the Phillip International Pioneer portfolio. We are actually managing money under this portfolio. It's our 18th month of operation. We started in 2022 January. It is an equity strategy where the focus is to have investors allocate to innovations and regional developments. Similarly, there is another product which we are looking at coming up shortly, which is the Phillip International Universal Portfolio. Now, this is a multi-asset portfolio which is comprised of exposures across different asset classes and different regions. A new service on the block is the Global Advisory, which is a curated collection of investment ideas. The advisory desk is really committed to providing expert advice so that investors are able to take well-informed investment decisions. And the advisory product, so while the global PMS is specifically catering to HNI and ultra HNI investors, investors who are looking at a slightly lower ticket size can actually look at accessing the global advisory solution. So the research remains the same, the expertise remains the same, but we also have the feasibility to actually create products to cater to slightly lower ticket size investors as well. So with this, I come to the end of the presentation. Just summing it all up, what is it that we are providing in Gift City? We are providing dollar-denominated investment solutions. We are investing in US listed securities, typically capturing growth stories across innovations and regional developments, and we are investing for the long term. And then finally, Gift City. So as you may or may not know that today Gift City is India's own offshore jurisdiction. It is completely distinct from SEBI and RBI. It has its own regulator by way of IFSCA, which is the International Financial Services Centers Authority. Now, that is the regulatory body which comes under the government of India. And that itself gives investor a lot of comfort because while Gift City is an offshore jurisdiction, investors remitting money to Gift City are assured that there is actually an Indian regulator which has a regulatory oversight. And again, the unique proposition for Gift City is that there are both residents as well as non-resident investors who can access Gift City. For resident Indians, of course, there is the LRS scheme, so liberalized remittance scheme. So while Gift City geographically is located in Gujarat, just on the outskirts of Ahmedabad, but because it is an offshore jurisdiction, for all exchange control purposes, it is considered to be a foreign land. And to that extent, any investments into Gift City will be made using the liberalized remittance scheme. And at Phillip Ventures IFSC, we provide complete end-to-end hand-holding to our clients to comply with the LRS requirements as well. And this is where we say that seamless implementation is something that we've really been able to consistently demonstrate with our global PMS product. So with this, I come to the end of the presentation. This is the actual picture of Gift City, something that we've taken from our own office. We really see the cityscape evolving month after month. Really exciting space for wealth advisors also to be. And yeah, looking forward. Thank you so much.
Thank you so much, Mr. Mihir Shirgaonkar.